Hi everybody, welcome back to Ox Talks. Appreciate you tuning into the show today. Hope you guys can hear me okay. I don't have my regular recording stuff here at the house. Just thought I would jump on a quick weekend show and address a topic that I've been seeing, in the last 24 hours proliferate certain social media and YouTube stuff about silver. We all know, if you guys follow silver, that yesterday it closed up over $2 an ounce, almost 7% on the day. It's on a tear for the year. And so now everyone's coming out, jumping on this bandwagon, saying it's going to the moon. And I was watching some YouTube videos earlier today about silver. Some people out there cautioning, but more so than the cautioners are the ones saying this is it. We're off to the races, going back to all-time highs of $50. The gold to silver ratio is 85-1 now. So everyone's saying you've got to convert gold to silver and jump on the bandwagon. Obviously, I'm celebrating with all the silver stackers. Been into silver since about 2012, 2013. I think it's a fantastic place to be in terms of alternative assets, liquid assets. Discuss it on this channel all the time. I was watching, actually, I talked to Jeremiah and Aaron yesterday briefly when they were on the road, and I think they had just interviewed Bill Holter. I think that interview aired today or yesterday. And they were saying that Holter's comment was, once silver, this is before the big close yesterday, and Holter was saying, Bill Holter was saying, once silver had to close over $32.50, that it would be off to the races, back to making highs again. Well, yesterday silver closed, I think by Kitco, $33.78, I believe, was the close. I think it's the highest going back to 2007 or something I saw. No, it wasn't 2007. Anyway, you guys comment below, but it was, it's been many, many, many years since silver closed at almost $34 an ounce. So here, my thought on this, and I saw an article I want to share with you out of Jerusalem Post that came out today. And I think this is the crux of it. And from my perspective, we know that silver is the Achilles heel, of a lot of institutions in this country, right? We know that a lot of the big banks short silver, on the paper market. We know that certain banks hold millions of ounces of physical silver, and so they have the ability to control the silver price. So I want to discuss that aspect, this angle with you guys. I'm not giving you financial advice. I'm not giving you trading advice. I just wanted to share this with you because we have to be cautious of this. We also have to understand that there will come a time, from my perspective, when the sentiment with these banks is forced to change. Again, leave your comment below if you guys agree or disagree with this. But here's the article. It says silver prices surge. Banks face billion-dollar losses. It says silver price explodes 6%, breaching $33.60 an ounce. 5 major U.S. banks face billions in losses from massive short positions. It says silver prices soared by over 6% yesterday, breaking through the crucial $33.60 per ounce mark and sending shockwaves through the global markets. The surge has put 5 major U.S. banks at risk of massive losses, potentially in the billions of dollars, due to their heavy short positions in the precious metal. According to data from the Commodities Futures Trading Commission, the CFTC, the open interest in silver futures contracts has reached a staggering 141,580 contracts, each representing 5,000 ounces of silver. This translates to a total of 707,900,000 ounces, nearly equivalent to a year's worth of global silver production. With silver prices surging by $1.84 per ounce, I think actually I should have was up over $2 an ounce. These short positions are now underwater by an estimated $1.3 billion. Sources close to the matter, don't know what that means, report that gold futures are experiencing a similar trend, with paper shorts down over $1.5 billion. The The scale of this short position is particularly alarming, it says, given that it is reportedly concentrated among just 5 U.S. banks. I'm sure you guys can name who they are. Industry analysts are questioning how such a small group of institutions could take on a short position representing an entire year's worth of global silver mining output. Well, I'll answer that question again from a layperson, a stacker's perspective. It's because we're not talking about physical. We're talking about paper ETF silver. We know that each contract represents 5,000 ounces paper. It doesn't exist. And so you've got these banks loading in on short positions. Critics argue that this level of short selling creates artificial downward pressure on silver prices, potentially suppressing its true value despite strong industrial demand from sectors such as electrical vehicles, solar panels, military applications, aerospace, and electronics. This paradox, it says, stems from the disconnect between paper contracts and physical metal. Banks can sell short excessive amounts of paper silver without owning or borrowing the actual metal, allowing them to manipulate prices downward even as the physical demand surges. It says this situation has raised concerns about market integrity and the potential for a supply crunch that could harm industries relying on silver. Some market watchers fear that a sharp rise in silver prices could force these banks to buy back large quantities of silver to cover their shorts, potentially leading to billions of dollars in losses. As this story develops, calls are growing, it says, for increased regulatory scrutiny of these practices to ensure fair price discovery and market stability in the precious metals sector. I will say I've been following this, guys, for 12 years now at least, and the old song and dance continues. And I want to give you my thoughts after I finish the article. This is the Silver Academy, an industry watchdog group, summed up the sentiment of many observers. Quote, "This behavior undermines market integrity and could have far-reaching consequences for both the financial sector and industries that depend on stable silver prices." And here's why I wanted to, and that was the purpose for the thumbnail today. It seems to me, as a layperson, observer, but stacker, physical, that you're not going to have a real upswing in these prices until you're able to really, let's say, disincentivize the large shorting positions. And, again, not an economic perspective per se, lay person, it seems to me that how that's done is that buyers continue to flood the market, right? Buyers. And I mean, that's buyers of physical, but I guess also buyers of paper silver, since unfortunately that does contribute to setting the spot price of the metal, right? But until we see that, not only a sentiment change where people are piling on, buying, not shorting, where then even the big banks, they don't want to lose money. Can they afford to lose it? Yes. Do a lot of them hold massive amounts of physical silver? Absolutely. I think JP Morgan is one example of that. But what you have to do is make them think twice about whether that trade is going to pay off. And if you have situations like this where silver rises $1, $2 in a day, a large amount since January of this year, if you punish the shorts for taking those positions, behavior will change, right? What's the saying? The beatings will continue until morale improves, right? So from my perspective, guys, be very, very careful piling in now on the buy. We should see what happens with the market Sunday night, where this opens. A lot of times you'll see a big gain on silver, and the next day they'll take it all back and then some, right? So I'm not trying to be negative. I've just been watching this game for a lot of years now, and the big banks have a lot of money, a lot of ability to short. And they can punish, the goal is to punish the sentiment from getting out of control, right? Everyone is exuberant right now from Friday's rush up. And, of course, people usually buy on the way up. They never buy on the way down, which is the more prudent thing to do. I'm not saying there's going to be a major pullback, but I'm just saying I would not be surprised if the big banks try to reverse those losses they suffered last week and come in and try to punish the longs, load up on paper shorts, and the game will continue. At some point in time, it will stop. I don't know when that's going to be. And again, you guys, I love to hear your comments. I do appreciate you watching the videos. Please share the videos, like them, and do me a favor and subscribe to the channel if you're enjoying the content. We are growing this community. With that being said, I'll keep it there today, about 10 minutes. Leave your comments below. Hashtag silver. Are you silver people? Do you play in the ETF markets? Are you looking at the silver mining shares? Do you own those? I'd love to get input from you guys around the country and other countries as well as to what your sentiment is and your feeling about silver. It is exciting what's happening, but you know the sentiment can be reversed very quickly with a big smackdown. So just living in the reality here. I wanted to share that with you guys in that article, which I thought was timely. Talk to you all soon. Bye.